Now, as it pertains to the P, which is property, when it comes to property, what banks are looking at and mortgage lenders are looking at is the property type to see if it's even a qualified property that they can work for. So, that's if it's a single family residence, a 2-unit or duplex, a triplex, which is 3 units, or a quadplex, which is 4 units. Most banks, when it comes to residential, it's 1 to 4 units. It could also be, I believe I said condo or a townhome or PUD. They're looking at the property type because they want to make sure it is eligible for financing. And they're also looking at your loan to value on that property. And loan to value is whatever the loan amount is versus whatever the value of that property is. So let's say you're looking to purchase a home for, let's say, $400,000, right? And you want to put down 20%, right? That'll bring you down somewhere to $320,000 as far as your loan that you'll be financing with the bank. So you'll need a loan for $320,000, but the value's $400,000. So right there you have 20% equity, which is a great rule of thumb when it comes to home purchases, is 20% down. That'll get you a pretty solid deal when it comes to your closing costs and your interest rate. Of course, you'll also want to make sure your credit's there and your debt to income ratios are there. But let's say you have $320,000 that you need a loan from the bank, and you'll pay them back in monthly payments. And your value of the home is $400,000. Pretty solid from right there. Now that is your loan to value. It's the loan versus the amount of value in the house. Same applies for a refinance. And that kind of sums up the P portion, but you want to ensure that if you are, doing a condo or a co-op, that the mortgage bank or mortgage lender that you're working with can actually complete a loan process with those property types. Co-ops are very common in like your New York areas, and what I've noticed is not all banks actually provide financing for co-ops. So you do want to make sure you're upfront and clear on what property type that you're looking to purchase, or if you're doing a refinance, what property type you currently have that you're looking to refi. Because you want to make sure the bank can do it. If it's a condo, a condominium, you want to ensure that it is approved by FHA if you are taking out an FHA loan, or VA if you're taking out a VA loan. Some loans, some condos may not be approved conventionally, so you want to make sure that's the case as well, that it is an approved loan. Same with a townhome or 1, 2, 3, 4 unit. You want to make sure it is an approved property that the bank you're dealing with can do, and if not, you want to seek that bank out. That's why there's another reason why you do want to start an application with a qualified mortgage professional who can tell you, hey, we can't even do this, or hey, there's no banks in this area that can do this. You want to be able to know that up front before you start paying off certain collections, even though of course you want to have those paid off, but before you start making big financial decisions, you do want to make sure it is going to actually be in the right direction towards getting that new home you're looking for, or getting that new refinance you're looking for. So when it comes to property, it's the property type and your loan to value. Those are two areas that the banks are looking for, mortgage lenders are looking for as it pertains to that. If you're doing a refinance and you have a home loan currently of $400,000, but the value of that home is actually $200,000, you would be considered underwater, and you may not be eligible for financing. There are streamlined options if you have a current FHA home that you may be able to take advantage of, or a current VA home that you may be able to take advantage of. But that again would determine the loan application being completed with a mortgage professional and them letting you know if that's even a viable option. So when it comes to property, it's your loan to value and the property type. Those two are key areas when it comes to completing your loan application that banks are looking for, that underwriters in that bank is looking for, to determine your ability to repay the loan. That's the key. That's why you hear a loan officer tell you, hey, I have to submit it to underwriting. The underwriter is going to determine, based on everything that the loan originator, which is the writer, technically, they're going to underwrite that and determine if the ability to repay is there, and the bank doesn't see any reason where there could be a hiccup where they have to foreclose. So that's what they're ultimately looking for, and that's what you want to make sure is in order.